Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Monday, June 1st. Firstly to the S&P 500, and here we see a continuation of the trend to the downside for today's trading. A candle making a lower high and a lower low, and forming an indecisive spinning top type candle. And it's indecisive because we have this very small body of the candle, and we have a shadow on the top and a shadow on the bottom. So the indecision comes from the decrease in momentum, and the actually a change of momentum from the sellers from the previous day with the black body candle, and slightly towards the buyers, and also the price rejection as evidenced by the shadow here to the downside, and then the price rejection to the upside, with the market finding support at the 2100 level, that round number that's been a very important level in the past, and also the Kijun-sen indicator. The resistance at the upside was just above the Tenkan-sen indicator and extending up to the 21.1959 level. So a lot of strong resistance overhead, a lot of strong support down below. Indecision in many time frames in this market, although in the longer term time frame we are still trading up above the Ichimoku cloud, and we have been for some time. But as we move into the next couple of weeks or so, we do have a thin part of the cloud that the market will be interacting with if we do trade down. So an opportunity here for the sellers if they're strong enough. Now this is also a potential bullish harami type pattern. We have a downtrend in place, not a significant downtrend, but still it is a downtrend. And here we have the body of the current candle within the body of the previous candle. So we'll be looking for a higher high and a higher low, but with this strong resistance overhead, really debatable whether the buyers are going to be strong enough to change that trend. Moving next to the Dow 30, and a very similar type of candle here, an indecisive spinning top type candle, but a candle where the sellers are unable to take out the previous low, and suggesting that we could see some strong support coming in around that area. Also the market interacting with the top of this highlighted zone of support that has been an important area in the recent past, and the candle for today's trading testing just to the previous important resistance level at 18,103, and at the bottom of this highlighted zone of previous resistance. So very strong resistance overhead, very strong support below, a very indecisive market. Bullish in the longer term time frame by trading above the cloud, but if we look here at the depth of the cloud over the next week or so, it's very thin. And there is an opportunity here for the sellers if they are strong enough to significantly change this trend in the longer term time frame by trading down through that Ichimoku cloud. Now what I'd like to see is a strong bearish close and some bearish follow through down through there, but importantly to test down below the bottom of this zone, down around the 17,683. So still a fair way to go before I'm convinced that we are going to have a strong bearish market in that longer term time frame on the daily charts with the Dow 30. Moving next to the Nasdaq 100, and a different type of candle with than the other equities indices that we've looked at. A black body candle, so still some downside momentum, but a candle where the body is more up towards the highs, and with the market closing up above the midpoint level, it suggests that even though the trend is down, we've had the buyers taking control of the market by the close of trading. We have this long shadow on the bottom, and that highlights the sellers losing commitment down below 45.10, which is the previous resistance area and now support, and testing almost to the 44.83 level of previous support and resistance, and some very strong price rejections suggest that there is a possibility for a change of trend to the upside. Also different in the depth away from the Ichimoku cloud, a little bit further away from the cloud, so a slightly stronger positive bias in that longer term time frame, and in the medium term time frame trading above the Kijun-sen indicator suggests we have a strong bias in the medium term time frame to the upside, as well as the short term time frame by trading above the Tenkan-sen, the green line here. One thing to watch here is that the Kijun-sen indicator is still pointing flat, and very often when it's flat we see price action attracted back towards it, and that's what we've been seeing. So there still is a possibility, even though the buyers have attempted to come into this market, there still is a possibility of the trend continuing to the downside. So the support at the Tenkan-sen and just above about the 45.03 level, and then down to the 44.83 level become very important. Next we'll take a quick look at some of the sector ETFs. XLV, the healthcare sector ETF, is the first, and strong bullish activity on the left hand chart, trading above each of the Ichimoku indicators for the fifth consecutive trading day, finding support at the Tenkan-sen indicator and bouncing off there, with the buyers taking back control of the market, even though we have a small body candle. So it suggests the possibility of the market trading to higher levels. But if you look here closely, the shadows on the top of all of these candles has seen the market being rejected from these higher levels consistently, so a very important trading day coming up. Even if the market is able to rally, we do have strong resistance up around this $76 level. It's actually 76, and if we look at the relative strength against the SPY ETF, the S&P 500 against the overall equities market, we have the healthcare sector ETF strongly outperforming, so suggesting that we certainly could see a continuation of that outperformance, but a lot depends on how the market reacts up around these levels here. Another strong performer here is XLK, the technology sector, and we've seen the market find support at the Tenkan-sen indicator for the last two trading days. A bit more buying coming in today, even though we have a black body candle, suggesting a possibility of a change of trend to the upside, and the market bouncing off that Tenkan-sen indicator. Outperformance here quite strong, performing outside of the upper band, and volatility is trending up off a cyclical low, so suggesting we certainly could see this ETF continue to the upside if we can breach this swing high, which is trading around the 43.80 level. And a strong underperformer here, the one that was a leader in this market, is the energy sector ETF. XLE is the code, and we saw previously where the market was trading outside of each of the Ichimoku indicators, we saw formation of this congestion area, which was a wedge type pattern. The close down below the bottom barrier confirming the completion of the pattern suggested that we were going to see trend development to the downside. That's exactly what we saw. The market trading down through the Tenkan-sen, then finding resistance on the rally from the support at the Kijun-sen indicator, and then eventually a breakout down below the Kijun-sen. A rally saw the Kijun-sen holding as resistance, and then further development to the downside in a second time frame downtrend, forming a series of lower peaks and lower troughs. Now we see the market trending down below the Ichimoku cloud as well as each of the Ichimoku indicators, suggesting we have a very strong negative bias in all three time frames. A bearish candle today, one of the more bearish that we've seen for the past week, and I suggest that what we'd like to see is the market trade down through the swing low here at $78, and if we see a bearish close down below there, we certainly could see a continuation of this trend to the downside. Looking at the relative strength against the SPY ETF, the S&P 500 ETF, strongly underperforming for all of that time and continuing to underperform. Volatility is still trending up, and suggesting we could see further downside trending price action, but a lot will depend on how the market reacts to the support at that swing low.